Now the last case scenario 20, it is on section 80JJAA, that is deduction on account of additional employment and tax computation. Mrs. Abhinav and Sons, a sole proprietorship, is engaged in the business of manufacturing pharmaceutical products, and it had started its business on 20th June 2018, that is in financial year 18-19, 4 years back. Tax head of Mrs. Abhinav and Sons furnishes you with the following particulars for the year ended 31st March 2023. Okay, now 80JJAA is available subject to various conditions. One of the conditions is that assessee should be engaged in business. That condition is fulfilled. Income under the head PGBP is 5,75,22,750, which is PGBP income. Interest on fixed deposit gross is 12,50,000. 12,50,000 is a gross amount. What is taxable is the gross amount. Had they given us the net amount, then we would have had to add back TDS amount. What is taxable is gross, and they have given us gross amount only. The same was received on 30th April 2022, that is in the current year 22-23, after deduction of tax at source. Now giving after deduction of tax at source in brackets does not make 12,50,000 a net amount. 12,50,000 is clearly given, it's the gross amount. What is received is not given to us. The amount of receipt is after deduction of TDS, but what is that amount? That is not given to us. This particular amount is subject to TDS under section 194A at the rate of 10%. Accordingly, TDS would be 1,25,000. Next is donation to PM CARES fund. CARES is not to be written this way. It is to be written in capitals because it is abbreviation of something. It is short form or abbreviation of Citizens Assistance in Relief and Relief in Emergency Situation. Any which ways, 2,50,000 will entitle the assessee to claim deduction under section 80G under category 1, that is 100% category, 100% of 2,50,000. Turnover during the previous year 22-23 is 15 crore 50 lakh, which is more than 1 crore as well as more than 10 crore. Therefore, assessee Messrs. Abhinav and Sons will be subjected to tax audit of books of account. Tax audit under section 44AB, which is also one of the prerequisite conditions of section 80JJAA. 80JJAA is not available to professional people. It is available only to business class people. It is available only if assessee is engaged in business. Second, assessee is liable for tax audit. Second condition is also fulfilled. Therefore, 80JJAA will be available. These two are deduction under chapter 6A. Messrs. Abhinav and Sons does not want to opt for the provisions of section 115 BAC. Well and good. If they would have opted for 115 BAC, then 80JJAA will still be available under 115 BAC also, but 80G would not have been allowable. But they are not opting for 115 BAC, so both the deductions will be allowable. It has employed total 150 employees during the previous year 21-22 with annual increment. 21-22 is the last year. However, there is a severe mistake on the part of institute in this solution. Most of you will not be able to find out also what exactly is the mistake. Let us work it out. Institute has literally blundered, but it's a human mistake which can be committed by anybody. So no prejudice mind for anybody, nothing to blame anybody. With an 150 employees are employed last year 21-22 with an annual increment means addition of 10% on their monthly emoluments, means monthly salary will be increased, monthly emoluments will be increased by 10% upon completion of 1 year. If right now salary is 10,000, next year per month, next year it will be 11,000 per month, next to next year it will be 12,000 per month, or rather it will be 12,100 per month. Whatever is the previous year salary, it will be increased by 10% of that monthly salary. Details of the same are as under. Now, how many employees are appointed? 150. Date of joining, number of employees, employee category, monthly emoluments per employee, and participating in the recognized provident fund or not. Now 80JJAA is available subject to various conditions. First condition is assessee should be engaged in business. That condition is fulfilled. Second, assessee should be liable for tax audit. That condition is also fulfilled. Third condition is that employee should be employed for 240 days or more than 240 days in the previous year in which he joins. Otherwise, deduction will be available from next year onwards. 80JJAA is available for 3 consecutive years, starting with the year of joining, starting with the year of additional employment. 3 consecutive assessment year. So even if employees are appointed last year, financial year, previous year 21-22, AY 22-23, then also deduction for the same will be allowed in the current year also, apart from last year. However, there is a major mistake on the part of institute. What is it? We will see. If employee is appointed for less than 240 days, then he will be considered as appointed in the next year. So, and another condition is that the monthly emolument should not exceed 25,000, should be paid by way of account payee check, account payee draft, except for the first year, account payee check, account payee draft, electronic clearing service or prescribed electronic modes. So that's the third condition. This is the fourth condition, and fifth condition is that employee should be participating in recognized provident fund. First two conditions are already fulfilled. Assessee is engaged in business. Number two, assessee is subjected to tax audit. Third condition, or rather I would say this is also one of the condition. Date of joining, first column, let's work it out. 50 employees have joined from 1st May 2021, that is more than 240 days. 1st June 21, 65 employees, that is again more than 240 days. 1st July 21, that is again also more than 240 days. 240 days is approximately 8 months. 8 months. So employee should have been appointed at any time during April, May, June, July, first 4 months. If appointed on or after 1st August 2021, then we would have had to check. Number of employees are 50, 65 and 35, totaling to 150 employees. Employee category is the next column, regular, casual, regular. Okay, monthly emoluments are 26,500. 26,500 is more than 25,000, so these 50 employees are chucked out. Participating in recognized provident fund or not makes no difference because monthly emoluments are more than 25,000. Yes, well and good. Next is 65 employees, casual employees, not participating in recognized provident fund, therefore they are not eligible even though monthly emoluments are well within the limit of 25,000 per month. So again 65 employees are not eligible because of non-participation in RPF. First 50 employees are not eligible because monthly emoluments are more than 25,000. Last 35 employees are regular employees, monthly emoluments 22,500, well within 25,000 limit, and are participating in RPF. So these 35 employees are eligible. So out of the three types of employees, first two types of employees are not eligible. Only 35 out of total 150 are eligible. Casual employees do not participate in a recognized provident fund. There is no need to clarify because here it is already given that they are not participating. Participation in RPF is one of the conditions for claiming 80JJAA. It has employed further 50 employees. Further 50 employees during the current year 22-23. So last year 150 employees were appointed, current year 50 employees, total 200 employees are appointed. Details of the same are as under. Now what blunder institute has carried out or worked out, we will check it out. Date of joining 1st April 22 and 1st August 22. 1st August 22, that means less than 240 days, so they will not be eligible. And 1st April 22 means more than 240 days. You can calculate it out. I have already calculated this out. This is 272 days in the previous table, and 1st April 22 means whole 365 days they are employed. 20 employees are regular employees, monthly emoluments are well within 25,000, participating in RPF, they are eligible. Means assessee Abhinav and Sons is eligible to claim deduction for under 80JJAA for these 20 employees. 30 employees are regular employees, but monthly emoluments are 26,000. Though they are participating in RPF, since monthly emoluments are more than 25,000, these 30 employees not eligible. So how many employees are eligible? Technically 35 from last year and 20 from current year. These 20. Total 55 employees salary is eligible for 80JJAA deduction. Emoluments to all the employees are being paid by way of account pay check only. This condition is also satisfied. This is one of the conditions, I had mentioned it here. Fourth condition. All conditions are fulfilled. No employees have left the job during previous year 21-22 as well as during previous year 22-23. So all the 55 employees who are eligible have continued. Last year's employees as well as current year's employee. Based on the facts of the case scenario given above, choose the most appropriate answer to the following questions. First question is very simple, 20.1. What is the due date of filing return of income for Messrs. Abhinav and Sons? The due date would be 31st October 2023. Why 31st October 2023? Because tax audit is mandatory. 31st July is for non-tax audit people. 30th November is for transfer pricing cases, which you will study at final CS stage. 30th September is not the due date at all. This is the wrong due date. There are only three due dates: 31st July, 30th November and 31st October. The answer is 31st October. Let's check what's institute's answer. Institute's answer is also 31st October for 20.1. Next question, and next three questions, in fact all the three questions, there is a corresponding mistake. 20.2, what is the amount of deduction available under 80JJAA? Now here institute has blundered. And the next question 20.3 is again based on the same, what is the total income, and the 20.4 is again based on this, it's in a continuity, what is the tax payable. So if institute makes a mistake in this question 20.2, the wrong amount of 80JJAA is claimed, then the total income, that is net income, will also go wrong, and accordingly tax computation will also go wrong. So all the three answers will not match with institute's answer. So let's work it out. What is the amount of 80JJAA? So I'm sure you have understood one thing, that 35 employees from last year and 20 employees from current year are eligible. Don't forget that for these 35 employees who were appointed last year, they were appointed on 1st July 2021. That means during the 9 months, last 9 months. So 9 months, their salary was 22,500. There is a 10% increment given here in the first table, in the line above the table. That means their salary would be 22,500 for the last 9 months of last year, 22,500 for the first 12 months, and thereafter it will be increased by 10%. It will become 24,003. Let me just calculate it out. 22,500 into 1.1, 24,750. 24,750 would be the salary for next year onwards. That means first 12 months an increment is going to be annual increment. First 12 months, 1st July 2021 till 30th June 2022, salary will be 22,500, and 24,750 will be from 1st July 2022 till 30th June 2023. This way 12 months period will be calculated. 12 months will not be from 1st April till 31st March. It will be from the date of joining 1st July 21 to 30th June 22. So technically 22,500. Note down all the details here. Here the salary is 22,500, but then salary will not be 22,500. Salary, it will be 22,500 in the current year. First 3 months of the current year it will be 22,500, and the last 9 months of the current year it will be 24,750. 10% increment, totaling to 12 months. Why 22,500? Last year 9 months are already completed. This year there will be first 3 months salary will continue to be 22,500, and then from 1st July 2022 salary will become 24,750. And for these 20 employees the salary is, these 20 employees salary is 21,000. 21,000 for the entire 12 months period, because they have joined on 1st April 2022. Let's work out. So solution should look like this. Our calculation, because the institute's answer is wrong, but why it is wrong and what is the institute's answer, I will explain you. First you understand what should have been the correct answer. 35 employees and 20 employees. 35 employees appointed on 1st July 21, that is last year, at 22,500. So first 3 months in the current year 22-23, they are appointed last year in 21-22. So current year first 3 months salary will be 22,500 per month into 3 months, and last 9 months of the current year salary will be increased by 10%, 24,750 into 3 months, into 9 months. Both multiplied by 35 employees, amount will be 23,62,500 and 77,96,250. How? Let's calculate it out. 22,500 into 3 months into 35 employees, 23,62,500, and then 22,500 is increased by 10%, becomes 24,750 into 9 months into 35 employees, 77,96,250. 77,96,250 plus 23,62,500 will be 1 crore 1 lakh 58,750. 1 crore 1 lakh, how much was it? 58,750. 58,750. I have written here, but that amount has gone in the next line, so you're not able to see. Okay, then 20 employees are appointed on 1st April 22, which is current year. All 12 months salary will be 21,000 per month. 21 into 12 into 20 employees. Amount is 50,40,000, which has gone in the next line, but doesn't matter. I'll reproduce it here. 50,40,000. 50,40,000 plus 1 crore 1 lakh 58,750 plus 50,40,000 1 crore 51 lakh 98,750. 1 crore 51 lakh 98,750. Amount has gone in the next line. 1 crore into 30%. Deduction will be 30% of emoluments paid to these employees. Total emoluments paid to these 55 employees is 1 crore 51 lakh 98,750. Into 30% will be 45 lakh 59,625. 45 lakh 59,625. This should be the correct answer. However, institute's answer is not this. Their answer is different. Why it is different, I'll show you. Let's check what's institute's answer first. Institute's answer is A, 36 lakhs 38,250. 36 38 250. 36 38 250. How they are getting 36 38 250? I'll explain it to you. This is our answer, 45 lakh 55,625. Now what institute has done, these 35 employees, as far as these 20 employees are concerned, institute's answer is matching, our answer is matching with institute's answer, 50 lakh 40,000. But as far as these 35 employees are concerned who were appointed last year on 1st July 21, by mistake, institute has considered them to have been appointed on 1st July 22 only. 1st July 22, and accordingly, for 9 months of the current year, 9 months, that is from 1st July 22 till 31st March 2023, for these 9 months, institute has counted salary to be 22,500 per month. So what has institute done? Though employed on 1st July 21 at 22,500, institute has not made this kind of calculation. Institute is not getting 1 crore 1 lakh 58,750. They have multiplied 22,500 with 9 months as if these employees were appointed on 1st July 22. I don't know on what basis they have committed this stupid mistake. Into 9 months into 35 employees, 70 lakh 87,500. 70 lakh 87,500 is their answer. How? 22,500 into 9 months into 35 employees. 70 lakh 87,500. I'm putting it in memory. And then as far as these 20 employees are concerned who are appointed on 1st April 22, 21,000 per month. The answer will remain same, 50 lakh 40,000. 50 lakh 40,000. So instead our total should have been 1 crore 51 98 750, but institute's total is 1 crore 21 lakh 27 500. Institute is getting this and this. 50 lakh 40,000 is matching with us, but 70 lakh 87 500 is not matching. We are getting 1 crore 1 lakh 58 750, which is the correct answer, but institute has done this way. 70 lakh 87 500 plus 50 lakh 40,000, 1 crore 21 lakh 27 500. 1 crore 21 lakh 27 500 into 30%. Let's check how institute is getting that answer. Into 0.3, institute's answer is 36 lakh 38 250. 36 38 250. Let's check whether this is the answer. 36 38 250. I hope you have understood how institute is getting this kind of answer. It took me a lot of time to work out and find it out as to what exactly is the mistake committed by institute. Doesn't matter, we should be, correct answer is 45 59 625. They are also human beings. This kind of mistakes possible. They are getting this answer instead of this answer. Okay, so now the next question, 20.3, which is based on the same. If institute's answer for 20.2 has gone wrong, then we will have to continue with this wrong answer. Then only we will get correct answer or answer matching with institute's answer. What would be the total income of Messrs. Abhinav and Sons? Now, total income, we have two incomes being provided to us. Number one, PGBP income 5 crore 75 lakh 22 750 and interest on fixed deposit, which is taxable under IFOS, of 12 lakh 50,000, which is gross amount. Taking total of these two, and then we have two deductions, ATG and this ATJJAA. So we'll just work it out. So computation of total income, PGBP income is already given, 5 crore 75 lakh 22 750. Interest on fixed deposit, which is taxable under IFOS. Gross amount, what is taxable is gross amount, 12 lakh 50,000. Total is 587 72 750. Less deduction under chapter 6A, ATJJAA, which we just calculated out. We'll continue with institute's wrong answer, because if I put correct amount, then our answer of NTI will not match with institute's answer. And ATG PM Cares Fund 100%, 2 lakh 50,000, totaling to 38 lakh 88,750. It's 36 38 250 plus 2 lakh 50,000. 38 88 250. 38 88 250 is to be subtracted from 5 crore 87 lakh 72,750. We will get 5 crore 48 lakh 84,500. 5 crore 48 lakh 84,500. Let's check what's institute's answer. Institute's answer is also 5 crore 48 lakh 84,500. This B point. Okay, and the third one and the last one, 20.4, what is the tax payable? Now tax will be payable again on the net income. So if net income answer is wrong, institute's answer is this, we will have to continue with that answer. Tax on 5 crore 48 84,500. Don't forget that since the amount is more than 5 crore, it will attract surcharge also, and that too at 37%. Assessee is not opting for 115 BSE, therefore tax will have to be computed under normal provision. As per normal provision, assessee is sole proprietorship concern. That means individual. First 2,50,000 is basic exemption limit. Tax will be nil. Next 2,50,000 at the rate of 10% will be 12,500. Next 5 lakh will be at the rate of 20%, 1 lakh. And balance out of 5 lakh 48 84,500, 10 lakh is gone. Balance is 5 crore 38 lakh 84,500 into 30%. 1 crore 61 lakh 65,350. Let's take the total. 5 crore 38 lakhs 84,500 into 0.3, 1 crore 61 lakh 65,350. This is correct, and the total plus 1 lakh 12,500, total will be 1 crore 62 lakh 77,850. 1 crore 62 lakh 77,850 plus surcharge at the rate of 37%. Why 37? Because income is more than 5 crore. And none of the income is a special income like LTCG under 112A, etc. Therefore 1 crore 62 lakh 77,850 into 0.37%, 60 lakh 22,805, rounded figure, 60 lakh 22,805, 60 lakh 22,805. Total will be 2 crore 23 lakh 0,655. So surcharge plus tax amount is 1 crore 62 lakh 77,850. Total is 2 crore 23 lakh 0,655. And plus health and education says at the rate of 4%. 4% of this, I'm putting this in memory and then multiplying it by 0.04. 8,92,026. 0.2 will round it off. 8,92,026. 892,026. Again I'm putting this into memory. 2 crore 31 lakh 92,681. 2 crore 31 lakh 92,681. 231 92,681. 0.2. Okay, now before we round it off, what is the question? Question is not asking us to find out only tax liability. Question says what would be the tax payable. Understand, in case scenario 19 they had asked us to calculate the tax liability, and in this question they are asking us to calculate tax payable. And tax liability is different, tax payable is different. Tax payable would be after TDS. Is there any TDS? Answer yes, there will be TDS on this 12,50,000 under section 194A at the rate of 10%. Assuming Abhinav and Sons, Abhinav the proprietorship has furnished permanent account number to the place where fixed deposit were put, and accordingly TDS is not 20% double rate. Sorry, TDS is not at the rate of 20%. If Abhinav and Sons would not have provided their permanent account number to the payer, then TDS would be at 20%. Assuming TDS is at 10% only, TDS would be 1,25,000. So for the purpose of computing tax payable, we will have to subtract this TDS, and TDS is 1,25,000. Accordingly, tax payable will come down to 2 crore 30 lakh 67,681. This minus 1,25,000, 2 crore 30 lakh 67,681 rounded off to 2 crore 30 lakh 67,680. 2 crore 30 lakh 67,680. Let's check what's institute's answer. Our answer is 2 crore 30 lakh 60 D. Institute's answer is also D for 20.4, 2 crore 30 lakh 67,680. I hope you people have understood that institute's answer for case scenario 20, MCQ 20.2, 20.3 and 20.4, all three of them have gone wrong correspondingly because 20.2 is wrong. Their answer is wrong. What should have been the correct answer, and what is institute's answer, and why the institute's answer is that we have worked it out. With that, this case scenario comes to an end. This was the last case scenario, so I will not say see you in the next video, but see you in CA final now. Thank you very much and wish you all a very good luck.